In 2021, I bought an investment condo in downtown Toronto. As you can imagine, a couple of things have changed: rents, interest rates, wars, and all these other things. I thought it'd be a great time to update you on what the numbers of that investment are looking like, and in general, what I think about investing in real estate in the GTA right now. Hi, my name is Vas, and I'm a chartered professional accountant by training. However, I am a full-time real estate broker right here in the GTA, helping people like yourself navigate through the insanity of what we call the real estate market. For full transparency, I will give you some context on this particular condo and why I thought it was a great deal, so that you know exactly where I'm coming from and why I'm running the numbers the way I'm running them. I think this is important because I think sometimes people deviate from facts, and then it skews the narrative of whatever information they're presenting in whichever way they want it to be. So this condo I got a great deal on. It was mispriced from the beginning. We had COVID, we had lockdowns, we just had a big mess, and condos weren't doing that well last year at all, and rents were low. So for me, the writing was kind of on the wall because, like I told you earlier, I'm very bullish on Toronto long term, and I think there's always going to be demand for great buildings, especially in great locations, because number one, existing inventory is already there. By the time something new is built, usually you can't even build in some of these specific places because there's already buildings there, so you're kind of limited. And that created an opportunity where I found a building that I really liked. It catered to a certain type of tenant that I wanted, and the building had great financials, so for me it was a no-brainer. The cherry on top was it was mispriced from the beginning. I think they listed it at 600 and change, then it was I think high 500s, and I bought it for 500,000. Now, obviously, this doesn't happen every day, but because this is my line of work, I obviously jump at opportunities like this when they present themselves because I know that they are rare. This obviously will skew my numbers. However, I will try to add some sanity and reality to these numbers to show you what the numbers would have looked like had I not gotten a deal, so that when we're comparing to current numbers, we have some context. So, I bought this condo for 500,000. I believe the market value at the time that I bought it was about 560,000. So I obviously had a massive discount out of the gate, and that is helping my numbers right now. Now, I'm not going to bore you with all the information here that I filled out, so the maintenance fees, the property taxes. The point here is that the NPV for this condo is 131,000, or roughly 14% IRR, which is great IRR. And I think this is pretty much one of the only metrics we can use here in the GTA when evaluating properties, at least one of the more important ones, I feel. Cap rates are pretty much irrelevant. Rentable metrics, none of that really matters, because for the most part here, we're buying for appreciation one way or another, either because we feel that particular area is going to appreciate above average, or ideally you buy something well below market, and that's how you kind of default get appreciation. The other cheat code in 2021 was that interest rates were so low that so much of your principal was getting paid down that's really what we were chasing. Even if you were negative cash flowing the unit, it didn't really matter that much because you were paying a massive amount of the actual principal every single month. So where do the numbers stack up on this particular condo? At face value, for me, it was 14% IRR, NPV at 131. Cap rate, again, cash on cash returns, again, these are irrelevant, but I felt like I should just put them here because some people still use them. And really, the other item here is I was out roughly $300 per month on this particular condo. Now, if I factor in that the market value was $560,000, so let's call it I got a $60,000 discount, my IRR immediately shoots up to 16%, and my NPV is 182, because when I liquidate eventually, I'm obviously going to capture that discount that I got up front. I think this is very important to mention up front, and this is why it's very important when you're buying condos. You have to look for that wedge deal or for that discount, because that is something you're going to cash out at the end. My interest rate at the time that was used in this model was 1.7%, and the rent I was using at the time was COVID rent, so it was $19.80. Obviously, these things have drastically changed since, so let's take a look at the model of what this condo would look like today if it was purchased right now. Before showing you the actual assumptions on my second model for buying that exact same unit this time, I wanted to make sure that you take a look at stats and what I think this unit would be worth today. So when I bought it last year, the average condo price was roughly $716,000, and as you can see right now, the average condo price is $772,000. So we've had, call it, an 8% increase in condo prices on average since then. So I got it at a discount. So let's say it was worth $560, but I got it for $500. So now I have to apply this 8% appreciation on the $560. So that puts this unit now to be worth roughly just over $600,000. I think it's worthwhile spending a little bit more time on this spreadsheet because there's a lot to digest here in terms of all the changes that have happened over the last 12 to 18 months. So as I had mentioned earlier, the purchase value or the market value of this condo right now would be 604. Let's say we come back with the 20% down. Here's our debt or mortgage payment. I've put the interest rate for this model at 4%. And by the way, as an investor, typically you always go variable in case you have to break it. You don't want to have to deal with the big penalties. And on average, variable has always been cheaper in the long run. I've always done variable personally. So that is the assumption I'm making here, regardless of where rates are right now. And I think variable is actually over 4%, but this is over the term of this investment, which is 10 years in this particular model. I've updated the maintenance fees, which have gone up by 8% in this particular building, and I have a video on maintenance fees going through the roof for condos. I was 8%, which I was happy because I've seen buildings go through 15%, some of them even 20% on a annualized basis. The big catch-all item here that everybody says, well, you know, rents are really high. Well, yeah, they're high. So the same unit that I currently have renting at about $2,000 is $2,500. And I've lowered depreciation from 4% to 3% for this particular model. That's just like, again, back to my sentiment. I think I'm a little bit more bearish right now, despite still thinking that these condos are going to do well long term. But let's get to the punchline. What does that look like for our for our main metric, which is IRR, and we're in single digits, 9.35. I've mentioned before that for me, an investment has to be in the mid-teens for it to be appealing, or at least something worthwhile considering. Single digit IRR in this market with this much uncertainty, this is a hard pass for me. That would be a no. It just doesn't seem like the risk is well worth it. And again, the other problem is right now, we don't have that many listings and it's hard to actually get a deal. So during COVID on condos, it was much easier to wedge in a deal and get something below market. Whereas right now, with the little inventory that we have, actually condos are going up in price. So for one, the numbers don't make sense, but on top of it, you can't actually get a deal. And if you can't get a deal, half of your equation or half the battle of actually making money on the condo at liquidation is pretty much gone. So at this point, you're dealing with high interest rates, no deals. Okay, you get high rent, so that's nice, but it doesn't cut it. So total carrying cost for these units, for this particular unit, has gone up roughly 50%. My carrying cost on this unit, I believe, was $2,300, everything all in. And right now, to carry this exact same unit with the current rate, it's over $3,000. So sure, I have $2,500 a month in rent, but I'm cash flowing another $737 on a monthly basis to keep this thing. A bit of a tough situation here, not something I want to get myself involved in, but this is where the numbers are at right now. Now let's assume you were able to get it a bit of a discount, maybe a $30,000 or $25,000 discount from where the current market value is. Yeah, you can probably get into the teens on IRR right here, but that is a very big what if. So if you can remember on the other model, we were in the teens. This is the old model. We were in the teens already without actually getting the unit below market. So as you can see right now, it's just not that compelling of a proposition. So that is the current landscape in investing right here in the GTA right now, as far as I see it. Condos, again, bullish long term, but if you're looking to buy one as an investment right now, it's going to make very little sense from just a pure numbers perspective. If you can get a deal on something, I mean, yeah, okay, fine. It just depends how much that deal is. And it also depends on how you feel about interest rates going forward. I do want to mention that I have seen other deals make a little bit more sense. I've seen multifamily deals make a lot more sense. One of my favorite, which would be freeholds converted to a quote-unquote duplex, or basically a freehold home with a secondary suite, a legal basement apartment. Those are still doing fairly well, but again, we can't hide from the high interest rates. At the end, the way I see it, it comes down to the deal, so it's a very deal-specific question whether or not investing makes sense. But as of right now, on average, I think it's probably a better idea to sit tight than to deploy money into something that I feel is a bit of a catching knife overall. If you like the content, please like it and subscribe to the channel. If you have comments or questions, post below or just email me or call me directly. I love chatting real estate, and if I can help you out, I will. And until next time.